Hey traders, Raghee here, and in this recap video we are going to talk about non-farm payroll, and I'm going to talk about what's called rare air and daily price movement ranges. This is how we see through walls. This is how we can understand where a market may go and position ourselves accordingly. So I'm going to walk you through the roadmap on the Euro US, because this week has been a very active Forex trading week, really currencies period. And one of the things that I want to emphasize that we do offer within the Simpler Futures membership is not only access to the Elliott Wave that David Starr does, but also access to the Currency Corner, which I do with Forex trading. And when we have the Reserve Bank of Australia, and we have data, jobs data coming out of Canada, and we have the non-farm payrolls, that is prime time Forex or currency trading in an environment. So that's where I want everyone to understand that, yeah, sometimes there'll be a futures alternative to the spot entry, to the spot or Forex market. But I will say it really behooves most traders, stock or futures traders, to understand what happens in the largest market in the world. You know, what is happening as it pertains to central banks and money. So let's talk about this. Is the euro done? Not by a long shot, gang. Of course, my opinion, but we're still talking about a euro. Now, let me give you some scale on this, because we've been getting long the euro. I've been pounding the table on this since early this year, and I want to show you why, because this is really important that you guys understand this. Take a look at the 2014 run-up in the US dollar. This is as the FOMC was preparing to do what? Taper the asset purchases, the monthly asset purchases, and prepare the markets for rate hikes. Look at the bulk of the movement. It was done in anticipation not of the rate hikes, but of the taper. And then once the hike started, we started chopping around. Well, I'm trying to explain the same thing to everybody when it comes to the euro. I've been talking about the euro since it crossed over 1380. We have positions built from 108.55 and 11.35, and we're looking for our next opportunity. But this market has now started its run up in anticipation of the taper, which means we are probably about the first fifth to about the first quarter of the move. I think by the end of this year we could be at 125, and I will not even be surprised if we're knocking on the door at 135, another 10 handles higher as we go into next year and finally get the announcement from Mario Draghi that they are indeed tapering. And then that begins the discounting, the expectations of when we're going to get the first rate hike out of the ECB. And then for the most part, much of the move will have been completed. When Draghi talks about taper, when he talks about rate hikes, again, there will be a lot of pips that were already left on the table. We're 1,000 pips into the initial entry. We're about 700 and change on the second entry, and we're looking for the next entry, which aggressive entries we got today. So let's talk about the roadmap and the PMRs. We had a high of 1879. That's what this is. It's a high. And from the high, we subtract what's known as the daily price movement range. It's a cousin to the average true range, but quite frankly, far superior. From that, we get an initial level that we would expect as a minimum of 1785. Aggro levels, in case the market didn't snap down to that level, we're at 1805, but we were really looking at 1785. And if the market goes ballistic on NFP and it starts to exceed 1785, which is this is the probability that we move this much, 68% probability. Okay, but if we exceed the 68% and start wandering into what's known as the 32%, what I call rare air, that's where we take the daily price movement range, add the hourly price movement range, and calculate at another extreme level to the downside that we would anticipate fatigue at, and that would be 1750. So right off the bat, we know 1785 and 1750 are potential fatigue levels. The low ultimately so far has been 1726. If you are prepared for 85 or even 50 and the market goes to 26, emotionally, do the mental wheels fall off the wagon? My argument is no. You're already expecting a major catalyst. You're already expecting extreme price movement range. You identify what that extreme price movement range would be, and then you get a 1726. Well, that number one just tagged barely the 13 EMA, which would be a very aggressive level on the daily. And take a look at the 480. This was the setup that we had in the spreadsheet in the members area. We didn't even break the 17 handle. We didn't even break the validity of the uptrend on the 480. This is a pretty easy buy. The only thing is 1785 ended up being a little bit more aggressive, but we're less than 20 pips. We're less than an hourly price movement of heat right now, of unrealized loss. And anyone who built a position from 1750, that rare air calculation, has about 15 pips of profit going into the weekend. So you take the two, it's pretty much unched. It's pretty much flat going into the weekend in a market that a lot of people feel is just really in the very early stages of a continued move higher. And that is the Euro US, and one of the predominant markets we had our focus on during today's NFP. And again, I wanted to highlight that we still do a good deal of Forex. I'd say, we do talk about futures a lot, but Forex are always kind of running parallel to the narrative because of the impact currencies have on darn near everything else. Okay? Everyone have a terrific weekend. I'll catch you in the next update.